Hi, welcome back to Joe Blogs. In today's episode, I want to give you an update as to what's happening with the Russian ruble. If you've been following the channel, you'll know that the ruble has fallen in value dramatically over the course of the last 12 months. This time last year, $1 was trading for around 60 Russian rubles. Today it's trading for more than 100 rubles, which means that 1 ruble is now worth less than 1 US cent. And the fall in the value of the ruble is really interesting because classic economic theory tells us that when an economy is doing well, generally speaking, the currency of that economy will also do well because people are buying things from that economy. Therefore, there is demand for that currency, and simple supply and demand economics tells us that when demand increases, then price should go up. And that's exactly the same for currency. But over the course of the last 12 months, the ruble has tanked in value, predominantly because there has been a huge reduction in the demand for the products that Russia was selling. Prior to its invasion of Ukraine, Russia was selling huge quantities of oil and natural gas, predominantly to Europe, but also to other countries in the West. However, because of the sanctions that are now in place, none of those countries are buying things from Russia, and Russia has had to pivot and sell all of its products to countries like India and China. But unfortunately, from Russia's point of view, it's had to offer large discounts. And one of the major problems that Russia has encountered with regards to the value of the ruble is that the deals that it's doing with China and India are not being struck in Russian rubles, they are being negotiated in Chinese yuan and Indian rupees. So this has effectively been a double whammy from Russia's point of view. It's lost sales and it's also lost deals in its own currency. Now, the reason I wanted to post this update video is that the value of the ruble has fallen again. This chart shows us the live exchange rate on Friday the 6th of October, which shows that the US dollar is currently trading for over 100 rubles. And as you can see from this daily chart, it's been trading above 100 for a considerable period of time. Now, if I change the scale of this to look at what's happened over the course of the last week, you can see that very briefly on the 4th of October, the rate popped up above 100. However, it very quickly came back down. And the likely reason for that was that the Russian central bank would have been operating in the markets, buying Russian rubles to force up the value, so therefore bring it down below the 100 level. However, the Russian central bank is very short of funds at the moment because of the huge deficits that Russia is continually posting. It doesn't want to be spending its very valuable cash on protecting the value of the ruble. It wants to be spending it on other things. And if we expand this chart out to show what's been happening over the course of the last month, you can see that this 100 level has only really been pressed over the course of the last week. And we change the chart to show 6 months, you can see that there was one instance back in August, on August the 14th, when the price actually did go above 100. Now, that was actually for a very brief period, and President Putin, who was furious about that situation, instructed the Russian central bank to do something about it. They organised an emergency meeting and hiked interest rates by 350 basis points. So that was a huge move. And the main driver for that was to bring the value of the ruble back down below 100. And you can see that it did have that short-term impact. However, over the course of the last month or so, we've seen the ruble declining in value again, and it's now past 100. And it'll be really fascinating to see whether or not President Putin instructs the Russian central bank to do something about it again. However, if the Russian central bank does decide to take action and increase interest rates again, that could have serious negative implications for the Russian economy. The Russian economy is in serious difficulty right now. It's lost a lot of income as a direct result of the sanctions, and most recently, Russia introduced an export ban on all of its refined fuel products. And those products were bringing in around $275 million of income per day. So Russia has lost in the region of $4 billion of income so far, at a time when it needs as much income as possible. Now, increasing interest rates is usually something that central banks do to try to tame inflation. If you've got runaway inflation, increasing interest rates increases the cost of borrowing, therefore discourages people from taking on more debt and reduces spending and should bring prices back down. But the last thing that Russia wants to do right now is reduce spending in its own economy. It needs to boost its own economy. So you can start to appreciate why this is a really delicate balancing act, because you've got President Putin who wants to maintain the value of the ruble because the ruble is linked to the success of the economy. So he doesn't want the ruble tanking. But the easiest way to try to protect the value is increasing interest rates, which in the longer term will have a negative impact on the Russian economy. So this really does become a vicious circle. And I think fundamentally, Russia is going to have to let the value of the ruble go. They simply can't keep raising interest rates to try to protect it because it's a short-term gain for a long-term loss. And ultimately, Russia needs to start building up its economy again if it's going to get back into the black, because the deficit that it posted in 2022 of 47 billion and the current year deficit, which looks like it's going to be more than 50 billion, is wiping out the National Wealth Fund. And at some point, if Russia doesn't stem the flow of losses, it's going to run out of cash, and that could be entirely disastrous for the Russian economy. So as I said at the start of this video, this is a brief update, slightly different to my usual videos, but I wanted to bring you right up to speed as to what was happening with the Russian ruble, because what we're seeing is the problems in the Russian economy manifesting themselves in the value of the ruble. And this is one of the areas that Russia can't control the supply of information for because it is a free market float. So hopefully you've enjoyed this slightly shorter episode. If you would like to see more details on the ruble and the implications of interest rate movements, have a look at the deep dive video that I posted recently. Hopefully you found today's shorter video useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. And thank you for watching this video all the way through to the end.